of higher interest rates, sending the real estate investment trust market into some turmoil. But my next guest says this could actually be a good entry point into real estate and the cycle here for rates. Joining us right now is Scott Crowe. He is the chief investment strategist at CenterSquare Investment Management. Scott, good to see you.
Good morning.
Thanks so much for joining us. So characterize what you're seeing in the real estate investment trust market right now.
Well, it's really interesting. We have two very different viewpoints out there in the market. On the one hand, you have the public equity markets pricing real estate at about a 10% discount to its underlying real estate value. And on the other side of the equation, you have groups like Blackstone privatizing real estate investment trusts at 23% premiums to their underlying to their last share price. So you've got one group of investors in the equity markets who are worried about things like the Fed, and another group which are looking at the underlying real estate fundamentals and saying that things are really, really good and the REITs are cheap.
Well, when you look at the overall fundamentals, you got to believe things are going well. I mean, rents have been soaring, right? And the vacancies are down, and you don't have much supply.
That's right. One of the interesting characteristics of this recovery is the lack of supply. Normally, 8 years into a recovery, you'd be actually seeing a lot more new stuff coming out of the ground. But that's a direct correlation to the fact that the downturn was so severe and risk aversion has hung around. And so what that means is that you're not seeing the same level of supply that you normally should. And even though growth has been pretty modest from an economic standpoint, rent growth is very, very strong.
And how would you speak to the public REITs, some of the big ones like a Vornado that have been very volatile recently? You look at Vornado, for instance, it was down 20% year to date. And then just in the last month, it's rallied up 10% off those lows. So clearly there was a great opportunity there. Do you still see that opportunity, or do you wait for more selling before you step in and buy?
Well, we think the opportunity is right now. I mean, the conventional wisdom is that REITs underperform into a rate hiking cycle, or when the Fed actually increases interest rates. And so what that means is historically REITs actually underperform prior to the Fed raising interest rates and then outperform after the event. And so, if you're interested in getting into the real estate cycle today is the opportunity. Don't wait.
But there's a growing thought, I guess, that commercial real estate is in a bubble in this country, particularly in your major cities in the United States, not residential, but certainly commercial. And you see what I would call overbuilding here in New York City at this point.
We're starting to see some cranes. That's a very valid point. Don't forget, it's going to take 2 to 3 years for this stuff to actually hit the market. So we definitely are past the halfway mark in the cycle. As to pricing, another valid point. Prices are probably 10-15% above peak values in many of the prime cities. The conundrum investors face today, though, is that yields are at back to all-time lows. In other words, prices are high. But at the same time, the 10-year bond yield's at 2%. So you can finance this real estate very attractively and still produce a great IRR. And so what's going to change that equation? Well, eventually the high prices are going to attract more and more development and more supply, but that could be years away.
Anastasia.
I agree. I mean, real estate has got to be an attractive investment right now, given how low yields are. But within private real estate, are there pockets of opportunity that we should be looking at? Is it apartments? The vacancies have been declining, but speaking of building, we may have built a bit too many of those, right? So is it apartments? Is it office real estate? Is it something else?
It's actually both those two areas. They're two of our favorite areas right now. And you're right, we have seen a lot of apartment supply, but for good reason. There are more and more people renting. They want to rent. Millennials,
which is why rents are going up.
That's right.
Dramatically.
People would rather rent in the city than own in the suburbs. And so I think the supply you're seeing is very normal and very healthy reaction to that secular change. The office markets are also normally late cycle plays. It takes a while for these kinds of assets to heat up in terms of rental growth.
One thing I would add about New York, though, you see rents going through the roof. You see a lot more supply coming on the market, and you have a quality of life that's spiraling down the toilet because of the mayor in this city. So I think that people aren't maybe paying attention because they're building in neighborhoods that are on kind of becoming questionable again. That's
Maybe the issue is not enough supply, right? Since rents are still going through the roof. Agreed.
That is more of the issue. The fact is where people want to do business and live has changed. And we need more real estate in those areas to basically allow that to happen without crazy prices. And so I think we need more supply, not less, to exactly address that point.
Scott, good to have you on the show today.
Thank you.
Thank you so much. We'll see you soon. Scott Crowe there.